In the currency quadrant, taking a look at the March Canadian dollar, which has now dropped for a third consecutive session, although it did rebound late day, but it stayed negative. Today was basically a straight down day. The high today, 69.62, was only up 2 basis points. So we basically call that unchanged from the settlement yesterday of 69.60 and a half. The low today, however, 69.23, was down a little bit more than a half of 1%. And it was the third lowest price we've seen going all the way back to 2003 for the Canadian dollar futures when you do a cumulative futures contract. And as we finish a little bit after the FOMC, so there's a little bit of time left in the futures session, but the New York cash session is closed, we're still down about 0.25%. The Bank of Canada this morning cut rates by 25 basis points. That was expected, but not only that, it dropped the Canadian dollar down by about 1/3% from near unchanged before the announcement. And they also are ending quantitative tightening and plan to restart asset purchases or quantitative easing by early March. That indicates some perceived weakness by the Bank of Canada in terms of the overall direction of the Canadian economy. And lastly, we had a Fed decision this afternoon. The U.S. Federal Open Markets Committee left rates unchanged, but on the statement, they omitted the prior reference to progress toward the Fed's 2% inflation target. That could signal concerns that inflation may have plateaued rather than continuing to decline. They also acknowledged that unemployment had stabilized at a low level. So this really, at least in the short term, seems like a more hawkish meeting. We'll see how the markets interpret it over the next couple of days.